everyone, welcome back to another episode of me talking about my portfolio on my journey to retiring by 40. So, this week, we have a lot more losses. Tech is still going down. We have a lot of the big players still losing a lot of valuation. For example, Apple, I think, went down about almost 10 points this week, which is not good. However, I don't think it'll continue for much longer. So, I read a lot of stuff about tech and stuff during the week, and I see a lot of people in the camp that Apple is overvalued and that their personal target for Apple is about $80, somewhere between $80 and $90. So it would be we would have to go about 16 points to 26 points if they are correct to go down further. Now, I don't think that's correct. So, if you watched last week's episode, I did say tech was going to go down again for this week, and I was correct. Now, will we go down next week again? I think so. I think we're still going to be in the negative for at least one more week, but I don't think that's going to keep going on longer than maybe 1 to 2 weeks. And the reason is because the Fed has basically they are saying that interest rates will be very, very low for 3 more years, or I guess 2 more years, since 2020 is almost over. What that means is that people will not be able to, or investors will be looking for different avenues to put their money in that will grow their money faster. Now, if I'm a smart investor, I'm not going to be going for a savings account, a CD, whatever, that gives me near zero interest rates. They are safe, but if I'm not getting enough interest, enough money back from my investment, there's no point, right? I'm going to go and look for something that will give me more returns. So now we're going to talk a little bit about two schools of thoughts. So there's technical analysis and there is fundamental analysis. So with technical analysis, I think that's the most popular one with people online and maybe even like millennials. People that are comfortable with computers will probably tend to be more in the technical analysis side. That's where they analyze charts, they try to see patterns and try to predict the future according to whatever pattern they see in the charts. Now, fundamental analysis is a little bit different. Actually, it's a lot of bit different. They look at the underlying value of a stock. And one of the big parts of fundamental analysis is that if interest rates are crap across the board, then the value of stocks will go up accordingly, because again, investors will look for opportunities to grow their money faster and still keeping relatively safe. So they go to the stock market, the stock prices go up accordingly, and then people make money that way. So what does this mean in the short term? Probably in the short term, like I said, we're probably still going to keep going down a little bit more. I keep noticing trends where people are just selling off. I see a lot of a lot of big investors selling off still tech, and it's probably going to go for another week at the least. But with these low interest rates going on for 2 more years, we are probably going to go for another bull, or keep going the bull pattern that we've had since for like 10 years. So I think this quote unquote tech bubble will probably be done in a couple with somewhere in October probably, and then we're gonna go up unless, and I said this in the last video too, I'm worried about the election. So if the election goes smoothly, whoever wins, if the election, the power transfer, or if Trump stays president, if all goes smoothly, I'm trying to dance around this. If both parties do not act like childs, we will be okay. But yeah, uh, without saying too much, if one president wins, I'm pretty sure the stock market will go down. If one president uh, gets elected over the other, I don't know how to say this. Basically, we have two presidential candidates for 2020. If one person will probably tank the stock market, the other person will probably keep it going. Is what I'm trying to say. If all things equal and the riots stop and we begin to open up more things, we're gonna keep going on with the 10-year bull session that we've been having for the long term. So now this, what I'm talking about here with the fundamental analysis, with the zero interest rate, will apply to basically every company if they're doing well. So really fast fundamental analysis, if all things are considered, right? If so fun. Okay, let's explain fundamental analysis real fast. If a stock offers dividends, then you should probably buy it. It'll give you more returns than a stock that has no dividends or lower dividends. The other thing is what I talked about. If interest rates are near zero, very low, investors tend to go to the stock market, driving prices up. And then the another thing would be that if a company has good financials, if they are a strong company, then they have a strong fundamental base, and you should probably buy it. So what this means is we have the zero interest rate, so that's good. You should probably look for a company that has no debt or zero or close to zero debt, and they offer dividends, and they are relatively cheap in value. So, and I know this is going to sound biased, but a good example of that is actually Apple. So Apple is a pretty cheap price. Entry point is $100. They have zero or close to zero debt. They have a lot of cash on hand, and they also offer dividends, which is admittedly it's a pretty crap dividend yield, but they at least offer dividends. So comparing it to a company that doesn't offer dividends, or a company that like let's say we'll compare Apple and Amazon. Apple is $100 versus Amazon that's around $3,000. So already right there, Apple is cheaper, has a lower barrier of entry. More people are going to invest to it. Probably not, because people just love Amazon more than Apple, I feel. Like investors, because Amazon has just been skyrocketing. But fundamentally, using fundamental analysis, Apple is a better company than Amazon because it's cheaper. I don't think Amazon has dividends. I can check that real fast. Yeah, no. So they don't have dividends, so Apple wins there too. So it's cheaper, no dividends. Apple has a really strong record of having no debt or almost close to zero debt. They use debt as a tool, and they know how to use debt. They know how to utilize debt, is what I'm saying. So in this case, Apple is a better buy than Amazon, fundamentally. Anyways, that's one school of thought. Like I said, there's also technical analysis where you look at the charts, and I don't think the web view. Well, actually, this is decent, I guess. Basically, fundamental analysis looks at the candlesticks to see the strength of a dip and the strength of a rise, and they try to analyze. They see patterns in it. They draw shapes and try to make voodoo out of charts, essentially. I don't know it that well. I have some friends that play around with it, but I don't have enough experience to really talk about it. However, so I did explain a little bit of fundamental analysis. I might do a video to kind of break it down a little bit further, but yeah, that's a little rant about Apple and why this ties in why I keep buying Apple. I think last week I had about 70 shares of Apple, and now I have close to 90. I'm gonna keep doing that. I hope it doesn't go down to sub $100, because that is way too cheap for Apple. There is no way Apple is worth less than $100. I don't care what valuation you use, because the all the metrics that people use that I've seen point to Apple being a pretty good buy. So, like for example, if you use the there's not a lot of statistics on the web view, but one stat people use is PE ratio, which I think Apple is at 35, and people think it's expensive, but you have Tesla that has a PE ratio of 1,000. You have Amazon that's like above 100 or near 100, and then you have Nvidia that's around 100 too. The point being, Apple and Microsoft both have pretty decent and I think fair PE ratio for being one and two of the big tech stocks that we have in America. Globally, 35 is pretty good. I think 35 valuation for Apple and Microsoft, or around 35, is pretty good. Their market cap is decent. I know Apple has gone up. They've doubled in 2 years or so. They used to be $1 trillion company, and they went past $2 trillion. Then they kind of lost it recently with the dip. But I think it's reasonable because Apple and Microsoft. But I'm going to primarily talk about Apple because I'm investing in Apple, and I believe in Apple more than Microsoft. Apple has how many really popular devices, right? They have the iPhone, iPad, Apple Watch, and Mac. 4 devices that usually sell really well. And then on top of that, they have a lot of services now that they offer. So they're good. And going off of that, the reason why I am very bullish on Apple long term is not, partly due because of the near zero rates on savings account and such, but also their recent event. They released a couple things. So they had an event on Tuesday of this week, September 15, I believe. Yeah, there we go, September 15. And they released some cool stuff. So it was a relatively boring event. If you watched it, you know it was kind of boring. They released two iPads and then and 2 Apple Watches. They released a lower end Apple Watch, they're calling it Apple Watch SE. So it's essentially the iPhone SE to the Apple Watch line, and they released 2 iPads. And the updates were good. They were relatively good. I think they were what was expected, but there was no new hardware. I wasn't expecting the Max, but there was no new exciting hardware, and they also pushed the iPhones next month. So I think a lot of people were just kind of like didn't really care. I personally, I bought a new Apple Watch because I wanted a cellular version, and the red one is pretty slick. Favorite color is red, so I had to get one. And I was disappointed because there was no new Apple TV, which I was in the market for, so I bit the bullet and bought the current one. So, yeah, it was a very disappointing event, is what I'm saying. But what is making me bullish on Apple is that they released Apple One, which is a subscription service that bundles a whole bunch of services together for a cheaper price. And the reason why is because I feel when I talk to people, they want certain subscriptions and don't want others, obviously, right? What I'm trying to say is, like, for me, for example, I've been using Apple Music for like 5 years. Since it came out, I've been using it. And I also have iCloud storage added, and I wanted to try Apple TV Plus, and I wanted Apple Arcade to kind of goof around when I'm not busy, basically. But I was also like, that's going to be quite a bit, right? So it would be $10 for Apple Music plus $12 or so for the other stuff, Arcade and TV Plus, and the iCloud storage. Now, instead of paying $21 to $22 for that, I can just pay $15 and essentially get one service for free. So, and that works for me because I can just kind of rationalize it as I get Apple Music, which I use, Apple TV, which I'll be using, and then the iCloud storage, which I'll definitely be using, and then I get Apple Arcade to kind of dick around with for free. This is great, obviously, but what I didn't expect were these other two tiers, and the one that really catches my eye is the family plan, because I think that's what I'm gonna go for. So recently I kind of introduced my girlfriend to the Apple ecosystem, and she likes it. She's actually planning on getting an iPhone when she can. I got her a Mac, and she just she loved it. And so what I'm saying is, with family plan, if I got to research a little bit more, I can share Apple Music with her because she loves music, and Apple TV Plus, which she's been kind of digging. We've been watching Ted Lasso. She likes it. And her family, I guess, can just use Apple Arcade. She has younger siblings. They can use that. Uh, that's gonna be great. That family plan for $20, I think a lot of people are gonna go for it, even if they don't have like a family where they have kids and stuff. I think couples will go for the family plan and splurge a little bit to. I wouldn't say splurge. They're gonna go for it to save money altogether on all the packages that they would already use. The last and final thing I'll say on this, because I feel like I've been talking about Apple too much, is they released another service called Apple Fitness Plus, which is like Peloton, where they have trainers and they kind of guide you through exercises and whatever. However, I think it's going to be slightly better than Peloton because I feel it's going to be more interactive. So if you have an Apple Watch, it'll tell you all your metrics and stuff. And this little screenshot doesn't give it much justice, but from what I saw from the demo is that when you're close to meeting goals, it'll be kind of interactive and kind of push you to finish or just kind of motivate you, which I like. And also, you can use this anywhere. So it can be on your phone and your Apple TV, and I think on your Mac, although I'm not too sure on that. And you're going to carry your phone everywhere, so you can have this in a hotel room, for example, and just do exercises wherever you are, as long as you don't mind looking kind of weird, doing whatever they're doing here in public. If you're doing it in public or whatever, it's going to be big. I think it's going to be big. Will it kill Peloton? I don't think so. But you have to think, right? When Apple Music came out, people were kind of down on it. They were saying it was late to the party. It wasn't good for publishers. Spotify was a thing. So I think Spotify already had like 20 million customers plus or whatever. So they were like, well, who's going to use Apple Music? And now Apple Music has like 40 million subscribers. I wouldn't count it out. If Apple has a track record of people they misjudge it. They misjudge whatever Apple releases. Recently you've seen it with AirPods. There were a lot of memes. Now everyone has AirPods. Like you can't. People are like Sony, Samsung, or whatever. They're copying AirPods. They're releasing their clones and whatnot. People are buying all these Bluetooth headsets that look just like AirPods. AirPods are everywhere. The idea of an AirPod is everywhere now. It's kind of ubiquitous with listening to music, or working out. If you're working out, you have AirPods or an AirPod clone and whatever, right? I think that's going to be the same thing with that happened with Apple Music. That's going to be happening with Apple Fitness Plus, where people kind of sleep on it, but then people actually use it. I don't think it'll be like an Apple News Plus situation where people don't use it, because Apple. I don't think anyone really uses Apple News Plus. Fitness Plus will be big. People are really into self improvement, and even if they don't use it, Apple will still collect their $9.99 a month. It's a no brainer. Apple with Apple Fitness Plus will see some decent gains. Anyways, enough of that. Let's review this week. So this week was my second biggest loss recorded, which See, again, I don't really mind the losses that much. I haven't really been paying attention too much. So since I can't day trade, you can watch the last video of why I can't day trade anymore. Um, it's investing in Robinhood, at least. It hasn't been fun. I don't really look at it during the day anymore because there's no motivation for me to, right? I can't really make plays since I can't day trade. So it's been kind of boring. I've noticed it's been boring during the week, during work, when I'm not doing stuff at work. I usually, you know, invest and do some trades or whatever. Now it's been kind of boring, which I do miss, and I can't wait till um, December 5th, I think. But other than that, we primarily lost most of it in Robinhood. That's where I keep dumping money on Apple. Since Apple's going down, of course, it's going to keep going down. Let's see. Yeah, I don't really care too much for right now because everything in tech in general, everything's falling. It's kind of expected that I'm going to be losing some money. The only thing that makes me depressed is the average weekly because it's way below my target now. But I mean, whatever, it's temporary. I'll get over it as long as I'm above 100 here, which is my yearly gain or my yearly target. Uh, then I'm good because right now I'm beating my goal for the year, and that's good. That's as long as it stays above that, I am good. But that's about it. Don't forget to click the thumbs up button if you liked my rant about why Apple's a good company. Essentially, it just this video turned out to be just like Apple is good. Um, but yeah, let me know what you guys think. I don't think I don't I really do think Apple is a terrific long term company, especially with what they released recently and what's in the pipeline with our Macs and 5G iPhones. It's going to be a great couple years for Apple. But yeah, see ya.